Today, we're talking about two of the most powerful forces in the entire trading game, fear and greed. These emotions don't just affect you, they shape the entire market. Think of the stock market as a giant mood ring reacting to millions of traders' feelings in real time. In this lesson, we're going to talk about how fear and greed move the market, how to spot these emotions in your own trading, and what you can do to stay calm and objective, even when the market feels like a roller coaster. And that is, if you've watched my old videos during the whole Trump tariff experience, that is exactly what I was going through. So let's break it down a little bit. You've probably heard the quote by Warren Buffett, "Be fearful when others are greedy and greedy when others are fearful." That's not just a cliche or a clever line. It's one of the best investing principles out there. Fear is a natural survival instinct. It's your brain's way of trying to protect you. But in trading, it can really mess things up. So here's how fear shows up for most beginning traders and for experienced ones as well. You have the fear of loss. You sell too early or you avoid good trades. Naturally, you have FOMO. You're chasing a stock because everyone else is making money. And then there's the fear of being wrong. You ignore the signs that your trade just isn't working and you lose more than you anticipated to. During a market crash, people panic and sell everything, even great investments. That's not strategy, that is fear. Now, let's talk a little bit about greed. Greed makes us want more profits, more trades, more everything. But if you're not careful, greed will push you into risky, reckless behavior. Greed shows up like this: over trading, jumping into too many trades, oversizing, risking too much in one position, ignoring the warning signs, chasing hype, and ignoring red flags. Here's an example. Think of the 2017 crypto or the dot-com bubble. Prices went wild and people ignored the warning signs. That's greed. The markets tend to move in a cycle between fear and greed, and here is how it works. You have the accumulation phase where the smart investors quietly buy when everyone else is scared. You have the markup phase where greed takes over and more people jump in. The distribution phase where smart money starts selling while everyone is still excited. And then the markdown phase where panic returns, prices drop, and the cycle starts again. Knowing where you are in this cycle helps you stay grounded and make better decisions. This requires you to be less emotional and more analytical because it will definitely help you make the best decision. Now that we've talked about how fear and greed work, how do we stay in control? Let's go over some strategies to help you trade with clarity instead of chaos. So the first thing you want to do is know your emotional triggers. Ask yourself, when do I get anxious, excited, or impulsive while I'm trading? Is it after a losing streak, during big news events, or watching a stock pump? A good strategy is to make a list of your personal emotional triggers so you can catch them early. One that I absolutely love the best is trading with clear rules. Don't wing it. Set rules before you enter a trade. For example, only risk 1 to 2% of your account per trade. Predefine your entry and your exit points and know when you're going to walk away. But the key to that is to set those rules and to stick to them. Having these rules will also help you make your best decisions before you're emotionally involved. And of course, in today's world, there's technology. Use technology as your trading assistant. It can really help you reduce those emotional decisions. When you use limit orders instead of chasing prices, preset stop losses and take profits, set alerts so you're not staring at the charts all day, and even consider automation for certain strategies. Lastly, and one of my favorites, is using visualization to prepare. Just like athletes, traders visualize success. Spend 5 to 10 minutes a day imagining you're entering a trade calmly, following your plan, staying cool even when things don't go perfectly. It's mental training for real performance. I personally take, and this may seem extreme, about an hour, 2 to 3 days out of a week. And I do that intentionally with my sauna and cold plunge sessions. Every time I'm in the sauna, I sit back and I think about what my day is going to look like, what my trades are. I imagine them as all winners. I do this all to prepare my mind for trading for the day and to also be prepared for what I might open up my app and see in the market. On that note, let's talk about how to keep cool when the markets are going wild, because there will be times when you open that app and everything is red. Literally, the market is bleeding. You want to focus on your process and not profits. Understand that a good trade can lose, a bad trade can win, and the process matters more than the outcome. Try grading your trades by how well you followed your plan. Celebrate your smart losses and call yourself out on lucky wins, because you will have a lot of those. Look at both technical and fundamental info. Seek out opposing opinions. You'll trade more clearly when you see the whole board. Don't just look at the good, don't just look at the bad. Use a combination of both and find yourself somewhere in the middle. And I can't say this enough. Keep a journal. Your trading journal is your best teacher. Track what you felt before, during, and after trades. What the market was doing. Did you follow your rules? Review it weekly to spot patterns and to help yourself level up. Now, before you trade, ask, what if the market dropped 5%? What if my position doubles? How will I respond? This keeps your brain from panicking when things get real, and they will. Now, if you click the link in the description box, I've provided a guided worksheet in the free Patreon community with 5 questions that will help you identify and take control of when you're feeling fear or when you're feeling greed. In our next lesson, we'll dive into how to build a daily routine that keeps your psychology sharp. That includes pre-market prep, post-market review, journaling habits, and how to manage stress like a pro. But before the next session, track your emotions during your next few trades. Start using one emotional control technique from today and practice labeling what you're feeling, then pause before acting. Click the link in that description bar to get access to the Fear and Greed Audit. It's one of the many resources we provide in our free Patreon community. Remember, emotions aren't bad, they're information. Look at them as data and information. Just don't let them be the boss of your trade. Make sure you like, comment, and subscribe, and I'll see you in the next video.